Hello and welcome to Property Information Evening. My name is Slish Chand and I'm a chartered accountant in public practice. Today we'll be talking for about 1 hour, 1 to 2 hours, depending on the feedback we get from you guys. So we are happy to take questions as we present and we'll answer them. But the format of the day, so it's pretty casual. Feel free to, liaise with us and all of that. We'll give you an opportunity to ask questions at the end as well. We'll hang around for about 15 minutes and answer more questions. And we'll run live examples on property investing and the strategies that we follow. And we'll try our best to make the next couple of hours entertaining for you. Now, guys, we've got State of Origin today, so I'm a big fan of State of Origin. I need to go home and watch my league, so I'll try my best to finish it before 9 o'clock. Before I move any further, I just want to ensure that everyone understands we are chartered accountants. We're not financial advisors and we cannot give you any financial advice. Please read the disclaimer we've got sitting on the screen. I'll give you about 5 seconds to read that. And if you've got any questions about that, email us. As I said, I'm a chartered accountant in public practice, and I've been practicing for a while, so I have about 18 years of experience now. I'm an active property investor as well. I buy and hold cash flow investing, and I do lend banking assets as well. I also invest funds into trading activities where we buy, do up houses, and on sell them for profit. I'm a partner here at GRA, so I've been partner for the last 14 years and we still well, I'm still a partner here at GRA, and like I said, I've got 18 years experience in property accounting and business accounting as well. Currently in our whole portfolio we have over 51 properties that are rented out. So these are our long-term hold properties. We don't intend to sell them. We'll hold on to them. Majority of these assets are generating cash flow positive, and they're land banking as well. So we can subdivide and build houses on majority of these properties. If I subdivided these properties, all of them, we will end up with about 300 sections. So you can see the beauty of buying properties with big land, cash flow positive, and land banking assets as well. Um, and this is one thing that I promote in my client base. You buy cash flow positive assets with land banking opportunities, or you buy assets that are heavily discounted. Currently, we are working on 70 new builds. We should have them finished in the next 6 months. And I think in the last in the last 3 to 4 weeks, we finished 8 new builds and we handed that over to our tenants. So our property investing is going well for us, and we continue to invest in properties. We like promoting property investment. That's something that we are good at GRA. We promote our clients to buy houses and and pay off their debt, which we call it forced savings when you're paying off your debt, and to build a portfolio. Now, if you don't know who GRA is or what we do, so GRA is an accounting firm. We specialize in property accounting and business accounting and any other matters that you may have. We also do asset protection. This is where we look at setting up structures, protecting your assets, especially your family home, your business, to ensure creditors cannot get them in the event of something going wrong. We also do insolvency work. So if you've got issues with creditors, IRD, or anyone else, we're happy to help you. And if we can't help you, we'll guide you through to the people you should be using. We do specific tax advice to your needs and tax planning to ensure we can save you tax. So this is some of the areas we specialize in. We also incorporate trust, and we are professional trustees in majority of the trusts we incorporate, or for people with younger kids, or basically, or a single parent will be sitting as a trustee in there to ensure their assets are protected. Um, One of our biggest advantage or biggest things we promote in the market is property investment and education. So we love sharing our knowledge. Together at GRA, we have over 200 years of experience with property investing. So we've come up with property school and property development schools. So this is where you can sign up for these courses and do them. They are one of the cheapest courses in town. They don't cost much, but it's really informative, and you get a list of supply chain that you can use when it comes to property investing. Later in the presentation, I've got really good friends of mine joining in, Than Sundar and Maggie. They're both amazing property investors. They're active, passive property investors. They are extremely smart with what they do, and they help me a lot. Together, we do a lot of investments, and I call them every day for advice. So they're really good friends of mine, and they're very smart. And you hear about their stories, how they started, and how they've created a portfolio around themselves. So stay in there, guys, and make sure you listen to them. So why property? Why are you sitting here listening to us and why do you want to get into properties, right? Like for me personally, property was about creating wealth for my family, creating lifestyle for my family, and giving me opportunities or allowing me to do things that I couldn't do if I had full-time employment. That's why I invest in properties. Now, if you're saving for retirement, let's say, you're 45 years old, your target is to save $2 million. So by the time you turn 65, that's in 20 years' time, you intend to save $2 million. So you need to save $100,000 a year. You would need to earn $250,000 as a PAYE salary. So if you look on the right here, on 250,000 salary, your PAYE is $74,000, your living expense is $76,000, your savings is $100,000, which means you need to save 100 grand a year. Now I can tell you, we process a lot of tax return. I've got a lot of mates who are high income earners, and I can tell you, when you earn $250,000, you spend $250,000. It's simple as that. It doesn't get any complicated, or you don't end up becoming a serious saver. Now, let's say you are good with money and you start saving 100 grand a year. You will be able to save 100 grand a year for the next 4 or 5 years. Say it gets to 500 grand. People at that stage, they start feeling sorry for themselves. They say, well, I'm turning 50. I've saved 500 grand in 5 years. I need to enjoy life. So what they start doing is using the money for holidays, brand new cars, renovating their house. This is what happens, right? And why not? Why not? I mean, if you've saved the money, why not spend some on yourself? So it's hard to save $2 million over 20 years. In fact, it's impossible, right? You really have to lock up your money and forget about it. 100 grand a year if you really want to save $2 million. So basically, we personally think it's impossible to do that. Now, let's say you are doing property investing and you're doing long-term property investing. Now, the advantage of property investing is you earn income. So you earn cash flow from buying properties, right? So there's constant income coming in that helps towards your operating expenses, which is rates, insurance, and your bank interest. You create wealth. Property over time goes up in value. They always go up in value. I've bought a lot of properties and they go up in value, right? And if you negotiate well, even in this market, if you negotiate well, you can create wealth extremely easily. If you negotiate a property by 150 grand, that's extra 150 grand in your pocket that you didn't have before. So that's the beauty of doing property investing. You can create that by negotiating or by buying properties right. You can retire securely as well, so you don't have to worry about money. Let's say you buy 5 properties and you hold on to these 5 properties over the next 10 to 15 years. You can sell to pay off your debt, and you end up with 3 freehold properties within 10 to 15 years. Those are some of the things that old investors were doing. Now, one of the things I learned about 18 years ago, which was promoted, was as an investor, you buy 10 houses. At the end of 10 years, you sell 5 and you freehold 5 houses. So you become mortgage free. That's what property allows you to do. Now, the other thing that property allows you to do is if you invest your money properly, you can refinance and extract some of your equity out. So if you do need to go on holiday, you can use some of your equity to go on holiday. That's what property allows you to do. But a natural capital growth creates wealth, and it gives you a lot of freedom that you can't think about, in terms of retirement, in terms of investing, refinancing, buying another property allows you to grow. It's changed your lifestyle. Once you have enough properties going and cash flow coming in, you don't need to work anymore. I basically created a good portfolio within 7 years of investing in properties, starting with none. Within 7 years, I had a portfolio I could retire on. Now, at 30 years old, when I turned 30, I basically went into retirement. I decided not to because I like doing what I do. I like coming to work. I like meeting people. I like accounting. I like doing accounting work. And most of the property investors are now my friends, and we do a lot of deals together. So that's the beauty of doing long-term property investing. And you got to remember, if property investments are done well, correctly, you can make money by buying for less than real market value. So that's your equity. That's if you bought a property, like I said earlier, for $150,000 discount, that's money that you've just created or wealth you've just created for yourself. Keep property for long term to gain capital gain. That's really important. Now, property investing is not short term; it's long term investing. You can rent or lease properties for rental income. So, as I mentioned earlier, that's your cash flow. And if you do improvements, repairs, or renovation in your building, you create value on your property. We can refinance and use that equity to buy another property. There's two types of properties, right? Passive property investing, passive and active investing. Now, passive investment is basically where you accumulate the right properties at the right price. Once you have enough, you're no longer required to work. There's enough cash coming in to pay the banks, to pay operating expenses, right? And if you do property investing correctly, you can do it basically, you can hit a good portfolio between 7 to 10 years. Now, Maggie, Then, and I will show you our portfolio, what we've created within 7 to 10 years of going into property investing. Now, long-term quality investments, so these are really, really good properties with big land, they actually leads to wealth. They go up in value. You can use that equity to grow, or you can cash out and release funds back to yourself. Also creates intergenerational wealth. So once you've created enough equity, you can actually pass down wealth to your kids or to your grandkids or help them into their houses or their first home. So property investing or passive investment is really important. Now, I'm a big I back up passive investment. I'm a big follower of passive investment. I invest a lot of my money or funds into passive investing where I'm chasing cash flow investments and land banking. That's really important. Here's an example of a property we bought in Adele Place in Weymouth. Rear house, front house. This is about, I would say, about 650 meters squared. We bought the property for 707,000. Renovation and subdivision. All of that has cost us about 42 grand. So total cost was 749. We projected market value. So that time we refinanced. It came back at 1.1. Today the property is worth about 1.4. Instant equity was 351,000. Right, this is on the day we bought it. We spent $42,000 on it. We released 351,000. We made 32% instant equity. Now that allowed us to use that 351,000 equity to buy more houses. Look at the cash flow we're getting. We're getting, I think the cash flow at the moment is about 1,300 a week, but $1,100 a week back then, $57,000 a year. Once we paid the operating expenses, 7.5, we banked $50,000, and we were 70% geared on the property, right? So our cash flow positive was $24,000 a year. What we did with that money was focus on paying off debt, right? That's all we do with our surplus cash. We focus on paying off debt. That's what we did, right? So this kind of property still exists. I still see clients buying this kind of properties in the market. This is what we call passive investing, right? Once you put enough money into a property, once you put the right cash flow positive property, it pays operating expenses and it gives you a cash flow. I would do this 100 times over again and again if I can find 100 more sites. This is how good these investings are. I mean, if you did 10 of this, that would give you 240,000 a year passive income. Just in passive, and also you have capital growth. That's the beauty of investing in properties. You get capital growth of averaging about 5 to 7% a year. Yes, we can say in the next couple of years the capital growth might be low, averages at 7% a year. Plus, you've also got cash returns coming in. So together you actually have more return in property investing than having your money sitting in a bank. And you have control. That's the most important part. Property investing allows you to have control of your wealth. Active investment is basically where you buy properties to do up and sell for profit. You buy properties that are worn out, you sell them for profit. You fix houses with issues, unconsented carports, garage, or something like that. You fix them and then rent them again. On sell them. Reclare leaky houses and sell them. Be careful with leaky properties. Not a lot of people are familiar with leaky houses. You could end up losing money. We rebuild rundown houses and then build new ones. That's something we do a lot, and we'll show you examples of that. And we also profit from we use the profits from active investing to boost our progress, either do more trades or use the money to pay off debts in the passive investments as well. So it just allows you to have more cash flow. But you've got to be too careful doing renovations or buying properties to sell. Remember, with trading properties, buying, doing up, and on selling them profit, you make your money on the day you buy the property for the right price. That's important to remember. Trading is about buying properties for the right price. You cannot get emotionally involved in it and end up putting your hands up at auction and paying top dollar. You've just got to buy it at the right price. And we'll give you examples of those as well. Here's an example of active investment that we did. So active is basically buying and not selling for profit. We bought this project and we sold it for 1.8 million. We bought it for 1.370, and our renovation cost and our holding cost and all of that came to about 1,049, and our profit before GST and tax was $315,000. Once we paid the GST, profit before tax was $267,000. This basically took us 6 months to make. We bought two houses, we subdivided, and we sold one, and sold them both. That's all we did, right? And basically spent some money on renovation, tidying it up, and we banked ourselves 314,000 profit before GST and income tax. Now this is active investment, so this kind of deals do hang around. Like I said, I've seen them all the time, and there's good cash flow with that. Here's a recent example of a trade we did. Bought this in 2023, right at the end of 2023. So we renovated. So it took us about 6 months to renovate. Cross lease, our renovation cost was 175. We'll show you why. So this is the before photos. Transaction will cost was about 8 grand, interest of about 26 plus 20 grand to the agent. So market value came to 875 to 900 grand. We ended up banking about $100,000 profit on this. Now, what does $175, 75,000 renovation get you? It's this. So from having the house look like that to a product looking like this, right? So this is the inside of the house. You can see how nice that looks, and we finished the project. Now, this is an example. The next one here is an example of a recent hole. Again, we bought this in November 2023. We paid 1.3 million for it. Renovation cost was about 20 grand. Our total cost came to 1.32 million. We are in the process of subdividing this property. So two dwellings, and it's got two houses, one at the back, one in the front. And currently we are renting this property for $2,500 a week. The reason this property is earning us $2,500 a week is because these properties are set up as disability homes. They don't exist. There's not much disability homes in town. So these properties obviously meet the tenant's requirement. It's got disability access. It's had other things done to it to make sure the tenants are safe. So, yep, we get $2,500 a week, and we're just paying off our debt on this property as fast as we can. So this is an example of land banking, cash flow. So we've got 1,000 square meters land, cash flow, two properties rented, and we bought it at the right price on the day. So I think the value of this property as of today is, sorry, I've just jumped ahead there. The value of this property as of today is about 1.8 million. So we've made ourselves a good 500 grand capital gain. So this is what we do, guys, every day. We don't change our formula. This is what we go out and hunt for all the time, So you can see the property next to this. That's nice, two houses there. That'd be a good one if someone picked that up. And if you look on the right, our neighbors ended up buying this two properties. So you can see all up. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. They bought two sections, subdivided, and built 10 houses. They've built it and it's fully sold out. So that's what's happening in the market at the moment. People are buying sections, building houses. So they did well with that. So that's why land banking is so important, guys. Here's another example of a recent property we bought. We paid $395. Our renovation cost was 60 grand. Total cost came to 455. This is in Rotorua. After reno value is 600 grand. It's a 900 meter squared, flat side, and we can add two more dwellings. Currently, the property is rented at $600 per week. That's amazing cash flow, So this is a property in Rotorua. Like, think about this, guys. For me to just build this house, forget about the land. It cost me about 600 grand to build this house in Rotorua without the land. The cost of building in Rotorua is more than Auckland. Cost of building a new house. So when you buy properties like this, it goes up in value. It goes up in value instantly. You create instant equity. You release your equity out, and you can buy more properties. So basically, we've bought this house for free. We've put the money initially, done all the work, refinanced, and got all our equity out. That's the kind of investment we follow. Where we don't have to put our capital in. We refinance and get our capital out. Here's our next door neighbor. So the property I was just showing you here. And then what's happened is our neighbors walked up to us and said, guys, do you want to buy us as well? So we purchased him for $360,000. Renovation and finder's cost was $80,000. Our total cost was $440. and this is a 855-meter squared site, rented at $600 per week as well. Now we have 15 and 17 Cypress in Rotorua, and we have over 1,700 meters square of land and two rental properties. And long-term plan is to build more houses on the site. So these are the properties I can't even build for that price. Forget about the land cost. I can't even build houses at that price. So these are good areas. Uh, Properties around this area they sell for 650, and they keep going up. Funnily enough, in the last 6 months, I've not managed to buy anything in Rotorua, purely because people are paying top dollars. Like my price is 400 grand, people are paying 700 grand for houses. But we still show up to auctions, we still chase deals, because we know once you're on it, you keep watching out, you'll come across a good deal. So here's another example of passive investment with land banking and cash flow. Now, this is a property we've just bought recently. I think it was in December 2024. We bought it for 310,000. We've renovated for 150,000. Total cost is 460. After reno values come at 700 grand. Equity gain 240 grand in 3 months. So it's 6 months, 6 months now. We've refinanced back at 490. We've reimbursed total cost plus 30K. Current rent is $45,500. That's the rent we're getting on this house. Our interest is 23, and our operating expense is about $10,000. So at the moment, this property is doing $10,000 a year net cash flow. Right now, look at this property. It's big land, 2 units, right? And we've bought the property with our capital, refinanced, took our capital back. In summary, we picked this property up for free. And this is our formula. This is exactly what our formula is. The way to grow is to make sure we can refinance and grab our capital out, and that's what we've done. Now, this is another development that we did in Auckland here that's been done and fully rented out for the last year or so. We bought a section, and we built 3 houses on this particular section. Land and subdivision was 1.8 million in Auckland, so Auckland's expensive compared to Rotorua. Build cost was 2 million. Now, build cost in Auckland is cheaper than Rotorua. If we were to build these 3 houses in Rotorua, we'd probably look at 2.7 million. Rotorua, for some reason, is 30-40% more expensive than Auckland. Our total cost was $3.8 million. Market value came back between 4.8 to 5 million. So our pre-tax profit of about $1 million we had. So we didn't sell this property. That's basically pre-tax profit is our equity. We haven't sold this property. We've rented them out, and we get a good cash flow from these properties. So, guys, if the presentation will continue, but I just want to quickly go over a few things. If you do want an initial meeting with us, we do get booked up. So it's really important that you scan that code we've got there and book yourself a meeting, or you can email Amy and she'll organize a meeting time for you. Now, we do offer non-GRA clients. So these are basically new clients coming on, or someone who's new to GRA. We offer you a free initial meeting for an hour. This is where we talk about asset protection, how we can protect your assets. We talk about tax planning. If we can save you tax, we'll tell you what it is. It's customized to your needs. And we talk about accounting services we can offer you. Now, this meeting is normally, $400 to $500 an hour, depending on the consultant we have. But if you are new to GRA, you get it for free. And if you do want to book us in, you can contact Amy or scan the code and fill out the form. Now, I've got Maggie coming on. Maggie is a passive investor. She's very smart, extremely smart at what she does, and very detailed person. I've never found someone so detailed. So Maggie, do you want to take over?
Yeah, hi everyone. Before I start my little piece, we've got one question, Celeste, about one of your Rotorua properties. Do you want to answer that before we carry on? So I think I was a bit slow and
Sorry. Back on. What was
just
the
got
question?
one. With the Ohata property, I'm sure I've said that wrong, OWHATA, on Cypress Place, how are you getting a valuation of 600,000 after renovation when renovated properties in the same area are selling for the low 500s?
Well, I have to do renovations to a higher standard because I rent my houses to social housing. We don't do basically shortcut renovations, so we don't cut corners. We do higher, and the valuers are valuing them higher because of the renovation work. Now, these properties are rented out for 5 to 10 years. The contracts are 5 to 10 years. So once we get a good contract on the property, that adds to the valuation of the property. So if we sold this property to someone else, they pick up a good rental income as well. So the values are sticking high. I can't find do-up properties at the moment. I'm struggling to find do-up properties for fives. I've been losing at every auction I've been going to. So so it's quite hard for me to find renovated properties at the moment. But I'm also out looking for them. If there's something good, I'm happy to find them. But yeah, I can tell you this now: to build a three-bedroom house in Rotorua, excluding land, you're probably looking at 600 grand, no less, no less. If you build a brand new house, and Maggie knows we build houses in Auckland, and we think to build houses in Auckland is expensive. In Rotorua, it's 30% more expensive. I can tell you this now. There you go. Maggie.
Thanks, Salesh. You'll hear Salesh talk a little bit later on in the presentation about how you get started. So I'll just quickly explain how I got started, and that was by getting the right sort of education and good advice right at the beginning, which helps you avoid making mistakes that can slow you down and cost you a lot of money. My particular situation, we started off with 2 ordinary incomes and just used ordinary bank lending throughout the process, so stayed away for sort of higher interest, higher risk lending. The starting point was one rental property that was worth about 430,000, and we're able to secure a $300,000 revolving credit facility against that. Early on, there was an occasional active trade, and Than will talk a lot about active trading, renovating to sell, which is a big part of his journey. And we did a lot of hands-on renovation work and self-managed a portfolio to keep the costs down and make sure that we're getting as much equity gain and return as possible. So over a 8-month period, in South Auckland where we started, we purchased 4 properties, starting with 2 from the same vendor, which is how we ended up with a little unit there at number 1. So same vendor selling the 2, a little 2-bedroom unit and a house and a granny flat. So purchase prices and the rents that the properties were earning at the time of purchase stated there. A few months later in May, we purchased another house and a consented sleep out. So the main house here, and then that photo below, there's a double garage, and through that little person door you can see there were 2 bedrooms and a bathroom. So all correctly consented. And then a few months later, we purchased a house with a sleep out. So a little sleep out there in the bottom photo on number 4 looks like a separate granny flat, but it was only consented as a sleep out. It didn't have a kitchen. And so the rent was lower there. That 440 rent represented the house only, and the sleep out was empty at the time that we purchased. So it was hard work, a lot of looking to acquire all that in 8 months. One of I'll go into a couple of them in a little bit more detail to show how strong equity gain and strong rental increases really help you boost your portfolio growth and move forward faster. So this is a house with a granny flat. It was purchased for 540 in January 2015, so that is quite some time ago now, but remember, I'm a passive investor, so we do this for the long term, and that was when we started. It was pretty run down, so initially spent 40,000. A few months later, or sorry, towards the end of that year in November, so initially there was a fixed term tenancy that had to come to an end. So once that ended, we then did some renovation work. So November, that property valued at 850,000. So it created 270,000 equity, and that's a huge jump to help you get going and grow your portfolio. It's now worth about $1 million. And of course, over that 10 years, there's been other costs. And now equity gains sitting at about 550,000. So a big part of moving forward and growing your portfolio is increasing the rent. So within a year, we're able to take it from the 585 that it was earning when we purchased to 840, and then that's grown to 990 over the intervening time frame. Another example of one of the properties that was purchased at that time was a house with oh no, I'm sorry, that's not a granny flat. my mistake on the slides, a house with a consented sleep out. So you can see the main house. The building, yellow building with the green roof, is a double garage and consented 2-bedroom and bathroom sleep out. And then there's a third building there. It looks like it's got a stripy roof, and that was a big shed. So initial property rent when we purchased this property for 620,000 in May was 650. So immediately, and it came with an existing tenant that was just renting the house and the sleep out. So immediately on purchasing that property, I was able to rent out the large shed and brought the rent up to 950, which without doing any work valued the property at 830,000. So created just over 200,000 equity in less than a month. Later on in years down the track, we did renovate the house between tenants because it's a bit run down. So we took the rent from 650 to 950 within a month of buying it. And then over the years, the rent increased and it was earning, after renovation, almost $1,300 a week. So two examples are the type of properties that help you build your portfolio and move faster. So 10 years on, of course, we purchased other properties after those initial 4, but 10 years on, we're reducing the size of the portfolio, selling some things and paying down debt with the sale proceeds. We're looking for passive income sooner rather than waiting another 15 years for the mortgages to pay off themselves. So that improves our ability to borrow and move forward in another growth phase. So a starting position summarised there, 430,000 was that first house that I mentioned. No home, we were renting ourselves. So the one rental earning 22,000 a year, and it had a bit of development potential. 10 years on, equities around 4 million. We have a home. There's 8 rental dwellings. Rental income's grown to 320,000. 4 properties with development potential, and now we have 7 sections, which could take up to 14 dwellings. We've never gone particularly fast. The starting point there was with the one rental property in 2015. We bought those 4 properties. So I've got 7 rents there because we had 7 separate income streams off 5 properties. Then it was another 2 years before we bought something else. So then that brought it up to 9 rental income streams. And then another purchase 2 years later, a property with 3 houses on it. So that brings us up to 12 rental income streams. 2 years later in 21, we sell a little bit, so drop the rental income streams. But now there's 4 rental income streams that are debt-free. At the end of that year, we bought a home, which is on a large piece of land. And then we started subdivision process that's creating the 7 new sites. The following year, they start earning some income. Last year, sold another property. So there's 6 rental incomes debt-free now and starting to earn some money off that land. This year, maybe starting to look to build. So very few purchases along the way. You don't necessarily have to buy a lot if you buy well.
Yep, absolutely. And if you look at what Maggie's done here, she's basically done this whole retirement portfolio between 7 to 10 years, Maggie, right?
Yeah.
Yeah, and that's why we keep repeating ourselves. It only takes good 7 to 10 years to create a retirement portfolio. The biggest thing over here, and Maggie and Thane will tell you that, is just hanging around people who understand property investing. That's so important, property, Maggie did property tutors and you did property school as well, Maggie, didn't you? And
Yes, early on we did property school.
yeah, and just surrounding yourself because you get a lot of negativity out there. People telling you property investing is not the way to go forward. It is actually the way to go forward. And I can tell anyone, read the books from Bob Jones, why property investing is so important. But this is an example of, Maggie coming with one property, and starting and just going hard, looking for right properties to buy, discounted, and holding on to it. Sorry, Maggie, and now you've got literally a debt-free portfolio, haven't you?
Yeah, well, a lot, not entirely yet, and
Yeah,
looking to leverage up again, but it's that second round of growing debt is now going to be off a base of a whole bunch of properties that are debt free.
perfect.
Mm,
Perfect. Well done.
thank you.
Well done, Maggie. And you always undersell yourself. You've done such a great job, and when you come to present, you're like, this. You've done so well.
Yeah, you've done
It
yeah.
doesn't seem like it when it's your own stuff. It just feels normal, not not in any way exceptional.
No,
Yeah.
well done. So it's my turn. So I like to share my story as to how property has got me to where I am at the moment. And for me, it was a different journey. My journey started as being an active investor. In that sense, what I did is I went and bought properties, bought it to renovate, to add value to it, and then sell it for a profit. What I'll do is before I get into my story, I want to share with you all one of the property that I got involved in doing a transaction where I for a bought it, renovated, and I sold it for a profit. So this one is in Bridgley Rise in Goodwin Heights, which is in South Auckland. So the background to this property is that it was a large floor area. So it was currently a two-bedroom, very dated, had a big floor area. So there was a potential to make it into a four-bedroom house with full upgrade to the property. New kitchen, new bathroom, full paint work inside out. As you can see from the photo there, the before and after. So we did a full remodel of the house so that it's targeted for a large family to purchase on the other end and to move in. And so that's the before and the after photo there that you see. But most importantly, what a lot of people want to see is the numbers. How did the transaction go? So we picked this up at auction at 824,500, and then spent just under $100,000 in renovation. When you include the real estate agent's fee, all the transaction costs, interest, so all up, it cost us 975,616, and then we sold it at auction for 1170. So we profited 194,000 before GST, and once you take tax off, 167,000 in a space of 4 months. So that's fantastic. That's great. And that's what I like to do, and I love to do it because it's something that I enjoy, being able to go out there and negotiate deals, and that's just who I am. Don't take no for an answer and going, why not? So, and this is not something that I've learned overnight, as this is something that's happened throughout the years through through coaching, training, going out there, buying something, making mistakes, and so forth. But deals like this exist, and the reason why I share this with you is to show you that there are money to be made in property as long as it's done correctly, and done properly under as long as you know what you're doing. So for me, when I started in property, or how did I got started in property? To be honest, 2015 is the time that I got into property, because I did not know anything. How to write a sales and purchase agreement, knowing what it looks like, to start off. So I was a sales rep in the freight industry. At that time I was earning 80K in salary. For me, company car, company phone, company laptop means I take home, work home. And for me, I thought, career wise was just work, 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 get up to senior management. But I don't know what hit me at one point. I was like, all this running around, what if something happens to me? What's there? Or if I get, fired, or if I got told to, that we made redundant. I had nothing behind my name, and there was nothing that I could fall back on. So talking to people, researching, getting on the internet, property is something that became a common denominator among people, and people that I talk to. So attended a seminar. Luckily for myself, I was able to save 50K in saving at that time, and then able to restructure and access to 130K of a revolving credit facility from the family, which I borrowed, and then got into education and went out there and bought my first deal in 2015, which was great and also nerve-wracking because it's all good to see numbers, but when you actually buy a property for yourself and go, you get the excitement of signing the contract, and then when you pay the deposit of 20, 30,000, that's real hard money going out of your saving account. You're going, oh my God, this better work out. So, so that was me in my first deal, and for me, having done that deal and made 65K profit in that first transaction was a real achievement because then for me, the money was real. It was in my bank account as a profit. It's in my bank account and the transaction work and the whole model works. So the next following year, I just had to get better at it. So while working full time, went out there and did 4 deals and profited 200K. So the goals was easy for me then, working a job at the same time, one a quarter. That was my pure goal. I could go out there every weekend, check out open homes after work or during lunch break, pick up the phone, do research, call real estate agents, see what's on the market, and really driving the goal that I set for myself. And then the following year, I resigned from that job, and because the reason is I was like, okay, I could do well if I can concentrate more and increase the number of deals that I wanted to do. So if we were to look at in a snapshot of how that transactions went through for each year. I did an average of 10 deals a year, and that kind of worked well for me. And that got me to where I am at the moment. All that learning, mistakes that I've done, the mistakes that was not to be repeated. All the learnings that I've done, all the success that I had. Then I came on board with GRA and then started teaching clients how to, basically not to go and reinvent the wheel, but to do what we do and make them, get the same result or better. But most importantly, being an active investor, I needed to convert those money into passive. So 2016 is the year that I went and bought my first home. And for me, that was a home and income. So I'll share that with you, what it looks like. So this was in Newland. So the front house that you see is the rundown property, and then it had an income at the back. So by that stage, I was no stranger to cosmetic renovation. So went down, looked at the property, took my builder friend in, and said, "Hey, does this look good? Are the bones solid?" And he said, "Did a examinations of the property or property inspection we call it, and said, look, it's perfectly fine." So got into it and renovated the house, moved in, and rented the property at the back. While there, got chatty with the neighbor, made good friends, and said, "Hey, look, if you're ever wanting to sell the property, knock on the door, give me the opportunity, and if I'm able to, get a mortgage, I'll be able to look to buy that out." And one day, without me realizing, she goes, "Oh, I'm going to downsize. I'm looking to move up north. Would you be interested?" And I said, "Oh, what's the price you're looking at?" So we negotiated a price where both parties were happy. She was saving on real estate agents fee, the headaches of open homes, and I've got a little bit of a discount. Went to the mortgage broker, drove up the contract, and yeah, and that was a successful transaction. So I bought the neighbor. At the moment, I'm sitting there waiting for the rear property to come to market. I have planted the seed, but I don't think, knowing that they know that I own the other two, they're probably holding off. But the reason for this is that because this is in a development zone, and I'll share what's my intention, because that land will then allow me to build 12 to 14 dwelling in the future. Same scenario with my home that I live in at the moment is, I had the eye of an active investor. Went to this property, looked at it, got it under contract, thinking of having to, trade it as in renovating and then sell it for a profit. But it was too much of not nice of a home, and it felt really homely. And my partner and I, we fell in love with it, and so we called the mortgage broker and said, "Hey, can we hold this property? Does the number stack up?" And he said, "Yep, let me put it through the bank and see what we can do." And yes, luckily we were able to, keep that as a home. And I'll share the numbers and the number on that property. And this is another one in Fawarna in South Auckland. It's a rental at the moment, and the intention there is to remove that house and build 3 dwelling standalone properties there. So I've got plans drawn for these properties. And this is the one that I wanted to share, the number one, the first home that we bought. So I could build 6 dwelling there, and that's something that's on the pipeline to do later on. Looking at the home, so this was the current property that I stay, so the renovation. So we bought it for 965, spent about 185,000 in renovation. The current CV of this property is 1.65. Oh, current market value, and it's at 1.4, 1.45. However, in the peak of the market, we'll be looking at close to CV. So for myself, I got 250K worth of equity that's sitting on the property so that I could go back, borrow against it, and into buying the next property. So the mindset for me as an investor and an active property trader, every single transaction is not just buying at the highest number. It's about what can I gain, how much discount I gain, how much equity I can gain, so that I don't have to wait for the market to move in order to get my money out. So these are the things that I've learned through seminars, property schools, going through education systems. But if you really want to get ahead, and if you don't, like myself, if what I don't know, I don't know until I put myself out there. So now that's my journey, and hopefully that excites some of you watching to take action and to doing something with or something through property. Salesh.
Oh, thank you, Then. Guys, I'm back on now, and I have to say to you guys, Then and Maggie have done really well, especially in the last 10 years. They've stuck in there, they've stayed in there. I mean, I was talking to Then a few years ago. He wanted to sell, and I said, no, you hold on to your properties as long as you can. And you know what? The great thing that's coming through at the moment, guys, is we've got cheap interest rate, we've got cheap money coming, and you definitely want to hold on to the money. So I'm going to tell you guys my story and what I do and how I do things. So a little bit about me. So I've said I'm a partner here at GRA. I started work at GRA in 2007 as a graduate. Back then you have clients come in with a shoebox, they chuck it on you and say, well, go and sort out my GST returns, and stuff like that. So that's what was happening back in the days. The advantage of doing data entry manually was I could understand what clients were doing. And it was a skill that I developed at a very young age, at about 22 years old. I started looking at numbers and understanding what they're doing, how they're making money, how they're losing money, and what mistakes, and what advantages or what are some of the strengths of property traders. So that's where I understood numbers. And nowadays you have Xero, you've got MYB as the software, so you don't do data entry as much. And in 2007, I was pretty broke with about $47,000 of debt. I still remember what the debt was made up of. It was made up of 30 grand student loan, 16 grand I borrowed to buy a black Ford Falcon, and then I put $1,000 of black wheels on it because you live out west, so you've got to look like a bogan. So black Ford Falcon with black wheels, and my mates used to call me the Night Rider. Uh, um, that's right. I don't know why, but somehow I ended up with their name. And today I do 50K a month in property growth. Now I just want to tell you what that means. 50 grand a month means I grow my equity by $50,000 minimum a month. In some month I grow my equity by 200 grand a month, but minimum 50 grand a month. And when you grow your equity 50 grand a month, this is what happens. So, I focus on growth. I focus on passive income. I do have some active income. Active means, where you buy and sell houses, but I'm more interested in growing my portfolio by sticking to passive income. So 2007, I had 47K of debt. In 2010, I bought my first property. I just got in there and started buying houses. 2024, we've got $44 million of whole property. This is our hold. This is not our development. We've got another $15 million of development coming through at the moment. So this is just whole properties where we're not intending to sell them. We're going to sit on it and rent them out long term and create cash flow. Um, After everyone's paid off, including the banks and everyone else, I think we're doing about 800 grand a year cash flow positive now because we've been hammering our debt down. We've been paying our debt down, so we are up to 800 grand a year cash flow positive. Now, this is the beauty of passive income and long-term investing. In 2010 is when I got my first property at 26. That's when I was 26. I bought my first property, right? By the time I was 31 years old or 30 years old. I went into retirement. I created myself enough passive income. Today we got a cash flow positive portfolio of about 800 grand a year. So that's after the banks and everyone is paid. We end up with that money and we're using the funds to pay off debt. All right. And we have sold some assets. We've sold assets that actually didn't meet our requirements. They were still cash flow positive. We've sold and moved on. Um, but the reason you can grow your portfolio to up to 45 million, and we're going to keep growing our portfolio, is because I chase that $50,000 of capital growth every month. Now, that's my minimum. Like I said, I create more growth than that. And that's what I'm teaching you guys here today. And I'm telling you, in this 1 hour presentation that we're doing today, I'm basically opening my secrets. I'm showing you my cards, what I do. Right? So this is another example of cash flow investing, the properties I chase. I bought this property in Rotorua for $515,000. Front house, back house, and there's a little unit in the front house as well. So there's 3 lots of income here. I've put 35,000 in renovation, so our total cost was 550. Um, our return, our market value at that time came at 850, so our instant equity was 300 grand. Instant equity, so important. I like to make instant equity. Now, I don't care, I can't sell the property for 850, irrelevant to me, because I don't want to sell the property. All I want the properties to do is stack up for the banks, and the banks appoint their own valuers. I don't get involved in the valuation stage. The banks have to randomly appoint their valuers. Our weekly rent on this house is $1,300 a week, right? So we get $67,600 a year in rent. Once we clear our operating expenses, we have about $56,000 left. And, we booked the interest back then at 4%, so we're going to book it back at 4% again. It's about to come off its fixed rate. After paying our interest at 70%, we bank $41,000 cash flow on this one. So it's $800 a week cash flow positive, guys, with this particular portfolio. So what we do with the cash flow that's coming in, we just use the money to pay off the debt. I like paying off debts, so that's what I do with the portfolio. Now, again, guys, this is my secret. Land banking, big site, multiple income, cash flow, right? This is what I like buying, and I like sitting on it. I can tell you this now, one house alone, a 3-bedroom house here, I can't build that house for 600 grand in Rotorua. I can tell you that. Rotorua, it's so expensive to do renovation. It takes a long time because it's hard to find tradies in Rotorua. In fact, half of my tradies go from Auckland to do work in Rotorua. This is another property that I bought in 2010. Now, you must be thinking, why am I showing you something from 15 years ago? I want you to look at what I'm doing 15 years ago now. This is a property I paid $320, and when I paid $320, I bought the front house. There was no house at the back, right? And then I renovated the front and I added a second dwelling at the back. My total cost was $610. My projected market value came back at 1.6 million a few years later, once the rear house was completed. That gave me an instant equity of 990, right? Once I finished the back house and renovated the front. 62%. Now, I don't care, back then I couldn't sell that house for that price. That didn't bother me. Today the section alone is probably worth 1.6, right? Now, I get rental income of $1,600 a week on that. Sorry, I haven't updated the numbers. So basically, at the moment, I get $82,000 income, and all that income I was getting, I was paying off debt. After operating expenses and everything, the 7.5 grand, I bank about 60 to 65,000 a year, and now I don't have any debt on the property. It's freehold, because any surplus income I had on this property, I've been paying debt off. So now that 60 grand, $1,000 a week cash flow positive comes to me now. I basically get that money. So what I do with that money is I use that funds to pay off my other debts down as fast as I can. I don't like taking my investment funds at the moment. I like to use any surplus income I have to grow my portfolio. So the reason I wanted to show you this is because I did this 15 years ago. The formula worked, and I continue doing it again. I would buy as many properties as I can if there's multiple dwellings on it. Really important. Now, guys, if keep questions coming. I'm going to stop shortly and I'll start answering your questions. So remember, you got Than, Maggie, and me here today. So feel free to ask as many questions as you can. So here's properties that I bought in the last 3 years in Rotorua. And the reason I've got you back to Rotorua is saying what I did back in 2015, I'm doing it now. So I bought this particular site here, and then I bought the rear property. Now, both these properties are rented for $600 a week. My game plan long term is to build 20 units here. So you got two road entrance. I'm going to build basically units on this side, and I'm going to start building them shortly. I've started working on the plans. So long term goal is to build as many units as I can, and create rental stock. Rotorua is going through a phase where they have major shortage of housing and they're looking for brand new houses. The whole old houses in Rotorua are extremely old. You know, they're about 70 years old. It doesn't comply with the current regulation. They're cold and damp. So once we build new houses, people will have nice houses to own or to live in, you know. So that's what we're focusing on. Here's another property that we bought. We basically bought two units on a site. We paid 400 grand for, and we spent 100 grand renovating. And what we did was, while we rented this out, we get $800 a week rent on this. We had our neighbors come up for sale, and we bought that as well. And the long-term plan here is to put more dwellings in. That's what we're doing here. And we'll go out and we look for this kind of sites. Now, you must be wondering, why am I telling you my secrets and all of that? The reason is I basically, I practice what I preach. I don't lie about my investments. I tell you what we invest in, and that's how I grow myself. Now, this is another development we did in Auckland. Now, it's on the way. Basically, we're looking finishing by December this year. We're building 8 units, so the land is cost us 1.3 million, including resource consent and building consent. To build this property is 2.05 million. Our total cost is 3.4 million. Our market value is 5.7 million once it's finished, so our equity gain of $2.3 million. Now, $2.3 million is a lot of money, and these properties will be rented out. They won't be sold. We like to hold our properties long term. We like to retain our equities, and we'll just keep paying off debt down. So this is what I'm doing in Auckland, and Then is managing the projects. He's out there on the street every day, making sure the projects are getting completed. And now, this is a particular interesting site we bought. The reason I'm showing you this is because I do land banking, and you must have had this few times, you know, where I'm saying I do land banking. So here's a particular site. We own about 1,600 meters squared in Glen Eden, right next to the railway. So this is where the trains come in. So we own this site, and under the land use changes, we can obviously build apartment. Our neighbors have already started building apartments. So we're looking at building 90 apartments on this particular site with 10 commercial units. Because this is the main road and it's a town center, you can have commercial units at the bottom with 60 car parks. Land and our consent drawing. So we bought the land 10 years ago, and all our consent, which is resource consent, building consent, basically comes to about $2.4 million. The value with resource consent is at $8 million. So there's a $5.6 million equity gain, right? So this is the kind of properties that I chase, and I think about it, where this property is going to be in 10 years' time, right? So careful, guys, when buying properties. You want to look at the land, you want to see what you can do with it, and obviously you want it to be cash flow positive. This particular property, as is cash flow positive. We get basically $3,000 a week rent from this property. We've got a warehouse, we've got a car yard, and we've got a residential property that's rented out, and it's bringing us $3,000 a week in rent. That's amazing cash flow, you know. So, and it's done that over the last 10 years. We've never had any issues with this site. It's right in the middle of Glen Eden Township. So guys, you've had our story, and you must be wondering, shit, this is complicated. Where do we start? What do we do, right? So what we've decided to do is, Stan, Maggie, and I have decided to draw you a roadmap, work out where you are in your life, you know, work out what do you want, or where do you want to be. That's quite important. So if you're as a couple, do a 10-year plan. If you're a single person, you know, you're not married, or you're divorced and you want to move forward, work out what do you want in the next 10 years of your life, and you start writing it down. You know, you might want a nice family home, a nice car, a badge, or you want to go traveling. Well, write all that down, and then you work out how do you get there. That's quite important, right? So what we also offer is a wealth suite. Basically, it's a software that analyzes property, and as part of coming onto property school, which we'll talk about in a sec, you get to use our wealth suite as a trial. You get the right knowledge in place, right? Basically, once you work out where you want to go, you get the right knowledge in place. You surround yourself with the right people. And at GRA, we offer you property school and development school as well. Now, the reason we offer you property school is because we want you to understand the terms we use, give you a list of supply chain and the people you should be using when doing properties. Um, Development school is something that we encourage you to do once you've done property school. So we more focus on property school in this presentation. Get a strategy put in place. What are you after? What do you want to do? Are you after cash flow positive, or you don't mind negative properties, or are you after land banking assets? So we get a strategy put in place, and then you get some advice around it. You try and talk to someone like Maggie or Than, and then you get the right structures put in place. Now it's very important your structures are put in place before you get finance. The banks hate it if they approve loans in your name, and then the accountants and the lawyers come through, go, no, 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 we need the loan to be in a company or in a trust. So you have to do the whole paperwork again. Once your structures are in place, then we arrange finance for you. So once you have finance, you can buy the right kind of properties. And at property school, you meet our brokers and our bankers, and you can then talk to them about doing finance and what kind of limits you'll have. And once you have your finance in place, you buy the houses with help of Maggie Then or other specialist people that you can find, and your lawyers as well, because they need to read the title. And GRA is always happy to help you. We are always available. So you got Maggie then, and basically one of our consultants, or if I have to get involved. Now, I've been doing this for 18 years, and I can tell you this now: 95% of my client base are multimillionaires. And they've stuck to property investing, and they've gone through all the waves of property prices going up and down, up and down. I'll tell you something interesting. In the last 2 years, I have had more clients buy properties to hold than sell. Very interesting. A lot of my clients went out there to buy properties as long-term investments to hold. They didn't want to trade. They didn't want to sell their properties when the markets were down. They were interested in buying more houses. So, yep, once you get the right people around you and you've got a strategy put in place, a GRA is always happy to help you. So property school, what is property school? Property school is about learning to do successful investing and understanding theories, and what to surround yourself and what not to surround yourself with. Avoid buying debt properties. You don't want to buy properties that's actually going to cost you money, or you're overpaying for properties. Very important. Now, once you join property school, we teach you how to avoid this kind of stuff. Be a confident and informed investor. Very important. You always be confident at negotiating, talking real estate, and become informed. Now once you do property school, we supply you with lawyers. We give you access to lawyers, we give you access to bankers, give you access to some of the tradies, not all of them. And you can get the right people to go and help you make the right decision. um, it's a huge amount, high volume content. So there's about, like I said, there's about 200 years of experience gone in there. You've got Matthew Gilligan, you've got me, you've got Than, you got Maggie in there talking about property investing ideas. You've got the bankers, all of that. And then you also get to try out our Wealth Suite, which is, a 7-week software you get for 7 weeks for free to use. And you can analyze, you can do your wealth tracking, you can see where you are. And if you like the product, come back to us, and I'm sure we can do you a deal with Wealth Suite. Now, Maggie, you want to tell us something about the new online property school? What's happening with that?
Yes, so I was just going to say, don't forget that we have a new property school starting on the 6th of August. So this one will be delivered live. It'll be online, so there's no need to come into the GRA offices or go anywhere else for that matter. You can participate from your couch or your batch or wherever you might be. Presented live. Each session will be recorded, and then it'll be available on demand afterwards. So if you want to rewatch any particular topic, or you weren't available that night, it'll all be recorded and uploaded online.
Perfect. Perfect, Maggie. And obviously, if you have signed up for property school now, you'll get obviously the old versions. But when you do, like Maggie said, when we have the new versions up and running, you get that for free. Now, what is property school? It's an online course. You get access for 12 months. So basically, you can, if you're a Superman, you can go through all the recordings. I think there's 7 recordings, isn't it, Maggie? All up? Roughly about 3 hours.
Probably about 3 hours, 8
Yeah.
weeks we're anticipating.
Okay. So
One
there's about
session a week.
21 hours of contents, isn't it?
Mhm.
There's about 21 hours of contents you'll have, and it's very informative. right? So you can submit your questions. Maggie or Thane will jump in there and answer them. And you get access to our Wealth Suite as well as part of Property School. And you get a book of your choice if you sign up for Property School today. Like I said, the reason we want you to sign up for Property School is the knowledge we are sharing, right? That's why we're doing it. It costs us way more money than what we are charging you. You can the software and the IT and the knowledge that goes behind it is expensive. So it's not some sort of course that we've designed to make money. It's designed to share information to you. Now, if you sign up today, you pay $4.95 plus you get the free access to the live version when that's up and running as well. So if you need to sign up, basically you need to go into one of those links were provided and then sign up for it. Now, if you can't sign up for it, feel free to email Amy and she'll sign you up for it. Now, I'm going to be nice today because I'm not feeling well. If you sign up today, I'll give you both books. You can have both books for free because, like I said, we happy to share knowledge. Now, I'm going to give you some recommendations. This is our recommendation. Now, get your questions ready, guys. We're about to finish the presentation. Get your questions. I'll answer them. Ask me about interest rates. Ask Maggie and Than some technical questions. Text as well. Ask them. I'll let them answer all the text questions. Now, Maggie, what did you spend on going and learning about property investing and that? Like, what did you spend?
We did a mentoring program. You mentioned it before, Property Tutors, which is no longer available because the tutor passed away a few years back. That was 35,000.
And,
And then soon after I did property school as well. So then there was another 500.
$500. Now
That's
then,
so that's such a great thing, isn't it? You can't put value on education. I'm just jumping the gun. I know it's coming.
well, Than's got a low IQ, so he had to go to special classes. Then, what did you spend on courses?
Oh, I think I've spent close to 100,000 in property education. So
Yeah.
to get me where I am, you could call it low IQ, or you could say it's I don't know, it's growth.
That
Well,
was the
I
first.
have a question for Salish though, because Salish, you haven't spent any money on sort of formal education. So how much have you lost on bad deals?
I have lost money. I'm not gonna lie. I'll probably say easy 200 grand. Right? I'll
Sorry.
probably say easy 200 grand making some wrong decisions sometimes, not listening to Than or Maggie. And that's part of doing properties, and I was ready to take the risk on the day, so yeah, it's not bad. It is what it is, and it's just not listening to your mates on the day. But yeah, so you can see Than spent 100 grand, Maggie spent 35,000, right? And we are offering you all our experience with offering you a supply chain, everything for $4.95, right? It's one of the best courses in the market. Now, this is my recommendation, guys. So this is what I think, and I've learned this over time and watching people and learning from clients. Don't do nothing, right? Act sooner, not later, right? Okay, most people will listen to us and do nothing. And I always get this. I wish I did this 10 years ago. I wish I did this 5 years ago. I wish I started this. 6 years ago, when I was presenting, I had the same recommendation. It hasn't changed, right, guys? So you really need to work hard yourself, get the right people to surround you, get the right property courses in place, and start getting into property investment if you want to look at early retirement between 7 to 10 years and buy the right kind of properties. I'm telling you, the market's getting hot, right? I've had a real estate agent ring me and say to me, I've run out of listing. One of the top agents, I need more listing. Get me more houses to sell. Okay. And they said it's just flipped. Everything is selling now. Don't use lack of time or fear as an excuse. Very important, Like you go and hang around with people who don't do properties, they'll just put fear in you. You have to take a risk in life. It's like when you wake up in the morning, you risk yourself getting in the car and going to work. Property investing is similar. You've got to take a calculated risk and then you execute. If your risk says, once you've calculated the risk, saying, don't do this project, don't do it. If it's not stacking up, and that's what you do. So you've got to have a risk factor. Like for me, my risk radar is $1 million. If I do a project and lose $1 million, I'll slap myself. right? But I'm still going to go to bed and sleep. Some people might have 200 grand. Some people might have 50 grand as a risk radar. I started with a 50 grand risk radar, but I needed a risk radar to take the risk and go forward. So very important you self yourself a risk radar and what are you trying to achieve. Draw yourself a timeline with targets, right? That's really important. Like if you where you are today, where do you want to be in 5 years? Where do you want to be in 10 years? And based on that, you do your property investing. Surround yourself with the right people. Again, repeating the same thing. Very important. Once you have the right people going, it works. Now, 90% of my tradies are the same. The 10% they were hard to deal with. We've vetted them out, got rid of them. My lawyers are the same. My bankers are all the same. My friends that do properties are all the same, and we do properties together. We talk about properties all the time. Now, when it comes to property investing, think long term, right? Don't think short term. Think about 10 years investment. Every 10 years, there's a property cycle, something happens, and you make money, you know. So think long term when it comes to property investing. Now, obviously, these are my recommendations. I don't want you to wake up tomorrow and resign from work and become a full-time property trader. You must have cash flow. Cash flow is important. So you can't just drop your work and go into property trading with second tier lenders or third tier lenders with 18% interest rates, right? You got to be careful, getting into that kind of strategy or scenario. That's not what I'm promoting here. I'm saying keep your job, keep your cash flow, and look at long-term investing in ideas. Now, this is a text message I had from a client that sent me that Maggie decided to put it. Now, I was showing Maggie the text, and she goes, "Oh, we should put this in our event, our property information evening." Now, this is a client who sent me a text. He goes, "I've been updating my Wealth Suite. Wealth Suite is basically a software you can put your statement of position in and see where you're going to be. I'm sitting on around $7 million just in property." He means $7 million equity. Big gains in the last 12 months, probably in the last 6 months. Yeah, you should be over $10 million in net worth. That's my reply. Now, when I said $10 million, I meant his business as well. His property plus his business. You have done well, mate. Whoa, yeah, maybe 10 million, but doesn't feel like it. But thanks. And he helped me a lot. So I appreciate that too, bro. Now, what he means is the reason he says 10 million doesn't feel a lot or doesn't feel like this because to go from 10 million to 11 million, it doesn't change your lifestyle. It doesn't really, right? So today, this guy is worth $18 million in net equity, right? And he's done really well. And you look at my last text to him, this is basically my magic ingredient. It doesn't change. What I've showed you throughout the presentation and examples of property I buy, this is basically what I do in that text message with 4 sentences. I think it's just sticking to the game plan. Buy properties, pay off debt, buy good assets, land bank, cash flow positive. That's it. There's no other magic ingredient. Do you agree, Maggie and Thane?
Mm.
Yeah.
Yeah, absolutely.
Yeah, and
How,
that's
how
it.
come you didn't how come you didn't put the other message that I asked you to put up here?
Oh, which one?
Probably not appropriate.
So this is it, guys. Like, and like I said, in the last 18 years, we've helped a lot of clients come through. Now, we're gonna guide you, but we can't constantly hold your hands, There's responsibilities that you gotta take. This particular person, I guided him through. He was in trouble when he met me. He was in negative $1.5 million position. So I've got out of negative 1.5 to $18 million over 10 years. That's what he did for himself. And he stuck and listened to everything I said. I said, mate, you need a company here. You need a trust here. You need the banks to approve loan in this entity. And he listened to everything I said from day one. So really important, guys. And this is what we're good at doing at GRA. It's just not me. Then and Maggie are amazing. Everyone has different skills and they're specialized and they're good at what they do. I'm not good at very detailed stuff. That's Maggie's responsibility. If the windows are out by 2 centimeters, Maggie needs to fix that up. Than's Than likes to talk to tradies and that, and get stuff done based on that. So we've all got our skills. We've got our advantages and disadvantages as well. And, so very important to understand. So this is a team effort. We've helped a lot of clients over the years. Like I said earlier, right? More than 95% of our client base, from my client base, are multimillionaires because they stick to property investing. Their mum and dad into property investing or their business owners and they use the profits into property investing. Now, Maggie, you're going to tell us a little bit about development school?
Yeah, just very quickly, because the starting point for people is obviously going to be property school, but if you are interested in developing property to build up your investment portfolio, then we've sort of put everything we know into a development school. So it's an online course as well. A lot of different specialist presenters, a lot of content presented by Matthew Gilligan as property school, as features Matthew as well as a primary presenter. So the course focuses on developing properties similar to the ones in the picture there, stuff that you're going to rent out or possibly sell to first or second home buyers. $750 for that course, and that's available online as well.
Perfect. And like we said, you got to do property school. Don't jump into this, but it's a great course. It gives you a list of supply chain and people you should be using. Um, Guys, this is a very important slide. So, if you can take a photo of this slide, go for it. Just a few issues on insurance, and lately we've seen it happen in our client base as well. Make sure your properties are insured to the current market value. Cost of replacing houses is very expensive. I'm just not kidding about it. If you bought a property 10 years ago and you got 400 grand insurance on the property, you should revisit that. If it's a 3-bedroom house, it costs you about 600 grand to replace it. That's your retaining wall. Touch wood, nothing happens to the house. But if the house catches fire, that's to clean the side up and rebuild a new house. We'll be struggling to do it anything cheaper than that. So be careful with that. Soft cost doesn't change. If you're building one house, 10 houses, soft cost is similar. So be very careful. So please check your insurance. We use a company called Initiate, and if you say you're a referral from GRA, you get a discount. They're very good, right, for your house insurance. So check your house insurance, your family home, your badge, your rental properties. It takes an hour or 2 hours to do this, but it could save you a few $100,000, right? So please look into that. Now, personal insurance, I tell you, super important to get your personal insurance. The most important thing I tell people to put in place, especially nowadays, is health insurance. We've got hospitals that are overloaded. You get really bad services at the hospital. In some cases, the doctors and nurses are not available. When you have private insurance, and touch wood, you don't need it. If you do need it on the day, you've got specialist care for you, and the insurance company pays for it. Now, I'm also going to say, personal health insurance is equally as important as investing in properties. That's how important personal health insurance is. You also got to look at your life insurance. If you've got too much debt, and something happens to you, you don't want your family to go through hardship. So it's important to have the right amount of life cover. Now, we use a company called riskdirect.co.nz, a guy by the name of Steve Monroe. So if you click on that, or if you take a photo and contact him, he will get in touch with you. And look, he might even review your current policies for free. You won't have to pay anything, right? He can't sell you. He's a financial advisor, so he can't forcefully sell you a product, but he can guide you and say if you need a product or you don't need a product, or your insurance current setup is fine. He'll just give you an honest opinion because he has to put notes in his system. So guys, get your health insurance checked. Get insurance put on your kids. Just health insurance. I'm not talking about life insurance. Health insurance, so important for you. I use basically about $17,000 a year in health insurance for my son. He's got extreme eczema, and they cost me $600 a year. I spend $600 and I get $17,000. And the only reason I had it, because when he was born, I was talking to my insurance broker at the time, and he said to me, "Oh, you got a newborn? We can add him in for $600 a year." And I said, "Okay, let's do that." I obviously didn't know my son was going to have eczema later in the years to come, but that's how much I spend, $17,000 a year. And when I read in newspapers that kids go to their GP and they've been given steroids, and the side effects of steroids are so bad, and luckily for us, my son doesn't need that. He goes through specialist care. There's 5 specialist care that the insurance companies pay for. Is basically a monthly care, and we don't have to stick to steroids. But those are some of the small things we go through in life. Get your health insurance checked. If you've got a good broker, get them to review it. If you don't have a good broker, get in touch with riskdirect.co.nz and get them to sort it out for you. They'll do it for free. If you need to make any changes, they'll recommend. So take a photo of that slide and get your insurance sorted, guys. Now, if you like to join GRA, if you like to follow us, please feel free to sign up to our newsletters or or our Facebook or Instagram and follow us through there. Now, the advantage of following us through some of these links is if there's anything happening out there, we'll write to you and we'll tell you what the new changes are and what you need to do. So there you guys, take a photo of that or feel free to write to Amy and she'll put you on our newsletter link. Now, before we end the presentation and answer some questions, if you do want a free initial meeting, please get in touch with Amy, or you can scan that code. And once you scan the code there, you can fill out the form and Amy will get in touch with you. And if you do sign up for Property School today, it's $4.95. And in the event you pay more for it, don't worry, we'll send you a refund. Now, what we'll do is we'll answer some questions for you. Maggie, we've got some questions coming through.
Yeah, so the first one is for Than. With the Birchley Rise property, what year was that bought and sold?
I think from memory, it was about 3.5 years ago that we did it, that transaction.
Where in New Zealand is the best place to invest in at the moment?
Well, I'm actually finding the best place to invest in properties at the moment, this is my experience, is out of Auckland. And when I say out of Auckland, I'm talking about Tauranga, I'm talking about Whangarei, I'm talking about Rotorua. I'm finding this place is quite good to invest in, and cash flow is available as well.
Mm.
Yeah. So yeah, and anyone that's new, I suggest you go and look at those areas.
Kelly asks if we're able to get a recording.
Yeah, sure.
Yeah, there'll be a recording link sent out to everybody that registered in a few days.
Yeah, absolutely.
Once Mandy edits out all our swearing and off-color jokes. Do you subdivide and add dwellings, or do you just add dwellings in the back section? That's for Rotorua or in general?
No, normally, if you are adding a back rear dwelling, I look at the cost of subdividing because it kind of makes sense to do it at the same time, because you can revalue the property up, or you can split bank. You can go to two different banks with two different properties. I suggest while you're doing your relocation, you're building a new house, you should look at subdivision because it never gets any cheaper. If it costs you 100 grand today to subdivide, I can tell you 5 years later it's 180 grand. It's like a boat; it never gets cheaper.
And some of that may be determined by what you have to do when you're adding the dwellings. If you have to install a whole lot of new infrastructure that is no different to what's required for subdivision, then they may not be much difference between subdivision and not. Or possibly in other instances, you might just be adding a granny flat perhaps, and you can hook into the existing house sewage and stormwater drains, and perhaps there's a big cost difference between subdivision and not subdivision if you're just adding one dwelling.
Yeah, absolutely.
So we've done that one. Would you like to share some mistakes you've made in property and how you recovered?
Yeah, so one of the sites we were doing subdivision and building houses, we didn't check the power line, and obviously as a result, our cost blew out by $480,000 just because of a power line. Can you imagine that? That's like lighting up a pit and then throwing $480,000 in it. That's exactly what's happened here. All right.
Ouch.
But luckily our margin was 2 million, so we still come out making 1.5 million. But it was just purely waste of money. So very important, buying sites, get people to watch that. I didn't see the power line as an issue at the time I bought the site. And it was basically, the architects that needed to use their head a little bit more and do the right drawings. So it got approved by a resource consent, it got approved by a building consent at the council, started building the house, and then Victor came and put a stop to it. Yeah.
That's really unfortunate, getting all your consents and getting that far along that before you find out there's a problem.
Yeah. And you stop, you can't build. You got the site opened up, you can't build for 1 year while you're going backwards and forwards with everyone. And everyone just takes you for a ride. So be very careful, Be very careful. So, and also we bought houses, buying trades. just underestimating the amount of work needed. So we've blown
Yeah.
the budget by 50 or 60 grand. Instead of making 90 grand on a profit, we ended up making 5 grand profit. So it just happens.
I'll share a couple of my earlier mistakes as well. I think it was my first transaction. I got excited, renovated, and I was offered a sale price of X amount of dollars, and I got greedy. So I was making 85K, and I was like, oh, I could get more. So it turns out I made 65. So that was fortunate enough and lucky enough to had that lesson early in the stage, that a win is a win, take it and move on to the next deal.
Mm.
And the other thing is also when you have tradies working on your site, take the time to go and check their work. Don't take your word for it, because I had instance where they've said they've done it. I took their word for it, and when it was on the market and the building inspector came to do the inspection under contract, it wasn't done properly or it was a shady job, and that cost me the sale. So, these are
Yeah.
the things that, you learn, and then, you make sure, that's not repeated. And not right now, every site we look at the power line.
Well, well, I tell you, funnily, Then said that about tradies. We had a site that we were doing installation, and the installation was sitting outside. It rained, and Then and I didn't know that. So the
Mm.
installation was wet, and it was put into the house and sealed up. And obviously, the property was signed up for $1.8 million. The building report came out saying this is a leaky building because this wall is wet. And we're like, well, it can't be because we've re-cladded the whole building and
Mm.
done it. So we open up the wall, we find the insulation's wet. As a
Mm.
result, the buyer pulled out, right? And we ended up selling the property for 1.6 million because we lost, the market was dropping. We lost 3 weeks
Mm.
And 200K.
and 200K.
Yeah.
200K. So careful with how installations are done on property. Who would have thought $150 of insulation, wet
Mm.
insulation, all the
Because it rained
tradie,
on it. And
yeah, all this tradie had to do was go, charge me extra, go down and buy a new bunch of insulation. Watch your tradies, very important. Always watch your tradies.
yeah,
I
I
mean, that
just
not to say that all of them are like that, just
Yeah,
you got to build that relationship and keep an eye on, keep an eye on it. At the end
yeah,
of the
you
day,
have
it's your project, it's your money.
yeah.
yeah, have to
It,
be aware of what's going on. I'd say my mistakes are probably being very conservative and missing out on opportunities, just not chasing them because I didn't want to borrow too much or didn't want to borrow from a non-bank lender. I think I could have achieved a lot more over the 10 years, been a bit more active, being very hands-on. I mean, they just don't have the time or the energy to look for additional deals. And I think that's a opportunities lost too. Because if you're
Mm.
busy working on site, clearing rubbish, doing your own renovations, you're not making good use of your time. You might have found another two deals.
yeah. Uh,
I thought, sorry, I thought you'd be doing your hair and so too busy to look at deals.
what's our next one, Maggie? Remember, guys, I have to go to State of Origin shortly.
Oh,
So
yes, quick. Okay,
quick,
quickly.
quick.
Last few questions. Um, do you use buyer agents for your deals? I never have.
Thin and I do.
Yeah, we have.
If someone shows me amazing deal, I'm happy to pay them 15 to 20 grand referral fee. I
Mm,
don't have a problem with that, you know. And one of the deals we did made there 350 grand. I think at the time we used a buyer's agent on that. So
Hmm.
buyer's agent brought it to us, and we ended up paying 30 grand in fee or something like that. We made 350 out of the deal. Yeah,
mm.
so happy to
Oh,
pay.
exactly. A good deal is a good deal,
Mm,
regardless how you find it.
yeah.
Um, should you be buying new build townhouses or old stock houses, as per our examples?
Well, I'm into buying new builds as well, townhouses, if someone gives me a good deal. Now, I'm only interested in buying the whole lot because I'm going to change it into social housing. So I'm not interested in buying 2 out of 3 or 2 out of 5. I've got to buy the whole lot to make it worthwhile for
And
me.
you probably wanted a discounted too.
I wanted it at a discount as well, and also that's just me. Now, um, I just want to say to a lot of people listening, social housing tenants doesn't mean they're painful to deal with. That could be one of your best neighbors. They're just quiet people, and social housing tenants are basically normal tenants who get benefit from the government, and there could be normal tenants coming from wins as well. You know, so they are good people. You know, you just got to have control and rules in place. You know, no dogs, no playing music, don't annoy your neighbors, don't hang your clothes over the fence. You know, you just set rules like that. You know, only if your neighbors annoy you, then you hang the clothes over the fence. But from that, no other issues, you know. But that's just me. But if you are a first time investor, all right, or even looking at buying a family home as one of those townhouses, negotiate well. You know, negotiate well, because I can tell you this now. In the next 20 months, you'll be, if you haven't bought a house or even a townhouse, you'll be sitting in a room of 20 buyers around you bidding against the same house. And they'd be happy to pay 150 grand more because money is going to become very cheap. And money is already cheap today. As of today, 4.8% over 3 years. That is cheap money. It doesn't get any cheaper than that, guys.
Mm. I
Yeah.
don't know if I was looking to buy new builds, and there's certain, I mean, certainly you've got no maintenance, nothing's going to need fixing for ages unless the tenant damages it. They're warm and dry and double glazed. I'm not sure that I'd want to be in one of those rows of terraced housing type situations. There's oversupply of those in a lot of the main centres. If you're buying them, you definitely want to be buying them at a very sharp price
Mm,
with a good return. Um, I, I,
absolutely.
I'd, but equally, you could be buying freestanding new builds as opposed to old houses.
Yeah. And remember, it's all about buying at the right price, at the right
Mm.
discount, in the right location. Don't buy in gangland. Simple as that. You know, I struggle with ganglands, so I
Mm.
avoid it. But yeah, be careful with that. No worries, Maggie. You got the next one coming up?
Kelly says, thank you for a great presentation. That one's done. Jonathan asks, are you still finding cash flow positive deals in the main centres?
Yeah, so that's Jonathan. Yes, we are. We are finding cash flow positive properties. Like we gave you examples, you got to buy, you know, you got to have a couple of streams of rental income, you know, one or two or three dwellings, and you can rent them out. Because I tell you, you know, if you spend, let's say, 500 grand on one rental property, imagine a second dwelling on the site and you've bought it for 600 grand, right? That, you know, doubles your rental income. You know, for literally the same amount of borrowing, you're getting twice the income, which is really helpful. So I'm always up for, you know, first stream of sorry, second stream of income or third or fourth stream of income into the property. It just helps with your cash flow.
I think
Corey
Maggie,
asks,
sorry, I think Maggie, we saw two properties that came to our table that had good cash flow, one in South Auckland, and I think one just came through now for us to review in West Auckland.
mhm.
But yeah, so they are there, but obviously it's hard to hard to find, and you got to do your groundwork.
Yeah, got to grow and make friends with the agents. So when they see something, they'll let you know straight away. You know, really important.
Corey asks an interesting question. Thoughts on buying horticulture property with intent to land bank with growing cities? For example, avocados or kiwi fruit orchards in the greater Bay of Plenty area.
I'm always up for properties that you can obviously rezone later. It's quite technical in terms of tax, what you need to watch out for. But I'm always up for that. If you can afford to hold on to properties that, you know, especially in places like Rotorua, Hamilton, Tauranga, you know, Whangarei, you know, these are towns that are needing houses. You know, if you can buy some of those good properties, you know, definitely you'll be sitting on gold mine at the right price. And it's complicated stuff. So make sure you do buy the right property because you don't want to buy a property that's red zone because it's going to be a wet area and the council needs all the water to go through it. You know, so watch what you're buying. Yeah,
Mm.
but good idea if you can fund it and if you've got the right investors around you. You know, if I found the right property tomorrow and I've got the good know people, I'd buy with them and land bank it. Definitely.
Mm. You'd want to know that it had appropriate zoning
Yes.
for future. So certainly a lot to look in. Now, I don't know anything about kiwi fruit, but I did hear something very interesting on the news or read in the media recently that with the changing climate, the traditional growing areas are no longer so suitable or becoming less suitable because it doesn't get cold enough for something to happen that
Right.
needs to happen for the plant. And so orchardists are actually looking to move to colder areas and are going to in the future have to relocate
To
places.
South Island.
Just closer to some hills or mountains
Ma-
where it was a bit colder.
Maggie's trying to promote Paston because that's where she is. She's like, she's wanting all the farmers to move there and pay top prices.
Well, yes, come and buy properties at high prices.
Right. What's our next one, Maggie?
Kelly says, I assume you all have rental agents to manage your properties or not?
Oh,
I don't.
definitely.
We do it ourselves.
Yeah, you definitely want to get a rental agent if you're doing it. You don't know what you're doing. Now, we do a lot of social housing. So Maggie manages her own. I do social housing. The governments have to manage the tenants. I try and stay away from the tenants. I do that. But Then I don't know if do you manage your own tenants or
I got one tenant that it's a friend, so I manage that. But I've got property manager and then social housing, so a
yeah,
mixture of everything actually. And to be honest, this is just my experience. I get the least complaint from social housing.
yeah.
Mm.
Yeah, my one tenant that's actually managed by a property manager causes me more annoying moments in my life, but and he doesn't get like Then said, social housing tenants don't cause much problem. Now, thank you guys, and anyone that you need anything, feel free to email us and we'll help you through. Like I said, Maggie, Then, and I, over the years, we've helped a lot of clients. We know a lot of people. We are well-connected people, and signing up for property school or giving properties to 495, it's not a money-making machine for us. It's not. We like to share knowledge. That's what we do at GRA. We give a lot of resources for free, you know, and that's what's helped our clients over the years to build their portfolios.
We
Ben,
don't like seeing people that have brought dud properties, have been talked into buying the wrong sort of thing, and yeah, want to see
yeah,
people do well.
you got to be careful. Like we've seen examples of people paying 1.1 million for 2-bedroom or 3-bedroom townhouses. You got to be careful with those kind of properties, They've got to be in an amazing location to stack up. Otherwise, those kind of properties can drop in numbers well. So if you are buying townhouses, make sure you negotiate well. They're not bad investments. People love townhouses because they don't like to buy lawnmowers or, anything like. They like to have one car park and they like to just walk into their house and do whatever they do inside, They like that kind of lifestyle. So they are not bad investments. But just be careful. It's like apartments, right? We had a phase where everyone wanted to stay in apartments. They thought it was cool. Now it's the townhouses, the next new thing. So just negotiate well. That's my only recommendation. That applies to you buying apartments or houses or townhouses in Aussie or NZ. No worries, guys. Have a great night, and hopefully we'll see you in the next presentation. So what we're doing as well is our next few presentations, we're only going to focus on a few things. We're not going to give you an overall picture on everything. So it'll be very focused on one particular area, like if we're focusing on interest rates or we're focusing on how to look for properties, we'll help you with that kind of stuff. Fantastic. Good night, guys.
Good night.
Thank you. Good night,
See you,
all.
bye.